Hi, welcome everyone. We're so happy to be here. We're going to do a brief 2-minute introduction of all the speakers on this wonderful panel, and then we're going to get right into the substance of some great questions. Talia, why don't you lead us off on your introduction?
Sure. So Orly and the EcoMotion team, thank you very much for having me. Hi everyone, my name is Talia. I am an investment director with Porsche Ventures. Porsche Ventures is the CVC arm of Porsche AG, headquartered in Stuttgart. We are a team of 16 in 4 geographical locations in the Silicon Valley, Shanghai, Germany, and Tel Aviv, focusing on investment areas surrounding mobility innovation, digital lifestyle, and emerging automotive technology.
Great, welcome. Thank you so much for being here and taking the time. Chris?
Thanks, Jim. Thanks, Mir and Orly. I'm Chris Thomas. I'm a co-founder and a partner with Assembly Ventures. We are focused uniquely on investing in early-stage mobility companies in the West. So we are based in Detroit and Berlin, and the reason the ETRA and the thesis for our fund is focused on 2 main theses. 1, we believe there's going to be a very strong bifurcation with China, and 2, we believe strongly in the industrial centers of the West. And this is certainly the Detroit Pittsburghs, the Stuttgart Munichs of the world, but it's also Tokyo, Busan, Goa. And we think they have 3 things in common. They have a tremendous amount of very valuable manufacturing capacity and strong balance sheets. They have pretty good strategy work that's been done that they know they must build, buy, or partner in the future of mobility. And they have some fear around what they're going to do and how they're going to do it. So we believe strongly that the future is going to be made up of strong teams across corporates and investors that are working together with deep subject matter expertise to solve the problems of mobility, which we define as the movement, both physical and digital, of people, goods, data, and energy.
Great, thanks for being here, Chris, as well. Niels?
Hello, my name is Niels Becker. Many thanks for having me here at the panel discussion. I'm representing Continental, one of the largest automotive tier 1 suppliers. At Continental, I'm heading the M&A and investment department. In addition, I co-manage, together with Jürgen Bilo, the COPACE organization. Together with Venture Capital, COPACE is our face to the startup world. Venture Capital invests in startups. They do so quite independently from the Continental organization. COPACE focuses on corporations and POCs with startups. In the past, we have also been quite interested in the Israeli startup ecosystem because we see a lot of high-tech companies and very well-educated founder teams. For example, we invested in Argus some 2.5 years ago, and in addition, quite recently, we did also 2 venture capital deals. We invested in Anagogue and Kartika.
Great, thanks again for joining, Niels. I'm Jim Scheinman, and I am the founder, managing partner of Maven Ventures. We're an early seed venture firm here in Silicon Valley. We're now most famous for investing, seeding, and naming Zoom, which is a company that we all use and love. But we also are very active in the mobility space, in particular in autonomous. And we were seed investors on the board of Cruise, now part of GM, as well as Embark, the leading self-driving truck company, and May Mobility, which recently closed the $25 million round from Toyota. So we're very active in particularly the autonomy space. So we have a panel here of experts in M&A and investment, and that's where we're going to start. So Talia, let me ask you the first question, and this will be an open discussion for all of us as well. So last couple of years have been very active for the leading automakers, the OEMs, suppliers, tier 1s, both in investment and M&A. How do you foresee 2020 and especially maybe next year? Post-COVID, is this going to increase your activity, decrease, stay the same? How do you feel about that?
I mean, I'll speak in more of a general sense and less specifically regarding my company. I think in general, the answer to that question is going to be depend. And it really depends on the overall strategy of the corporation. It depends on the structure of the investment vehicles and how it sees M&A in general. If a corporate venture arm is an on-balance sheet fund, you might see more of an emphasis on liquidity, and so therefore less deployment of capital for investments and M&A purposes. On the other hand, you have a lot of opportunities. You have a lot of distressed companies today who went into 2020 that were not well capitalized and needed to raise funds. And you find that there are a lot of opportunities. So it depends on what the strategy and overall vision of the investment entity. But overall, I think there is a lot of opportunity. And I'm hoping that we will see more than less.
So without putting you on the spot, what can you say about your particular situation? I mean, are you same budget? Does, have you had discussions about what budget looks like for next year?
I think that the emphasis right now is to really see, with regards, we have 16 portfolio companies. We want to see that our portfolio companies are doing well, have enough runway to weather the storm. Nobody really knows how long it's going to take. And so we're really trying to focus to see that our companies are well capitalized, at least for the runway that they need in order to either be able to raise additional capital or get into some sort of a break-even point where they can self-sustain. That's probably the best that I can say.
Hey, Chris, any thoughts on that?
Yeah, so I actually think that there's going to be a similar number of deals, but they're going to look very different in terms of how we think about consolidation, IP plays, differentiated, advantageous opportunities, and then also strong teams and strong technologies are still going to be in demand. So we've done a little bit of work kind of looking at the West and looking at deal value and number of deals, looking at 18 and 19 in the trend analysis. So from 18, you went from 61.2 billion to 93 billion with an M&A activity, and you went from 97 deals to 121, split between North America and Europe. We believe that those numbers are going to remain the same on the number of deals, but value and structure may be very, very different.
Okay, let me also share my view on this. With regard to M&A activity, I think you could see that volumes and value of transactions in the first 2 months of the current year were quite comparable to prior years. Once the coronavirus has spread across the world, you could see that in March, the M&A activity significantly dropped. A lot of M&A transactions have been stopped and a lot of auctions have been pulled and have been postponed until either the end of the year or until 2021. What you can see despite is that there are some selective transactions, like the recently announced Intel mortgage transaction. So there seems to be still some M&A opportunities, maybe at a lower price, but the overall volume will definitely be lower than in prior years. With regard to venture capital, I think it's a little bit into the same direction. New investments might be difficult. I think only the companies that can prove a very strong business model might be able to secure new funds. With regard to portfolio management, I think most of the investors might be concerned with their portfolios. They might provide them with sufficient funds to survive the current crisis.
And I'd add that I think Talia's point is spot on around companies that came into this year poorly capitalized. On the flip side of this coin, you look at the Lime transaction that just took place. And obviously there's differentiated user environments there as well, but I think that comment's super important.
Yeah, from an early investor perspective, it's concerning. I mean, I think we're slowing down our investment pace in mobility, and in particular around AV. Not because we don't think it's still a massive opportunity and a great place to invest, but I think the liquidity issues are a little frightening for us as the first check-in, right? And then we want to see that the downstream investors, the A investors, the corporate VCs who generally support the companies that we help to bring to the world are still going to be very supportive there. And I think some of what we're talking about is there's interest in, first and foremost, protecting your own portfolios, right? You got the companies you already have invested in, you want to see survive. With that said, it sounds like there's still interest in new investment opportunities, especially around, potentially, future trends, which we're going to get to. It's one of the things I want to definitely discuss. But Chris, I'm going to shift a little bit for a second here and ask you first. The pandemic has really changed dramatically what's happening in the mobility space with OEMs, with supply chains, with automotive dealerships. what's permanent? What's sort of temporary? Like, are we never going to go back into car dealerships and buy cars like that again? Is it all going to be online? Is it, is this, and one of the questions we'll talk about later is around AV, but how do you see what's going on and how do you see it playing out in the next year and maybe the next 5 or 10 years?
Yeah, specifically with regard to dealerships, I think it's a really interesting question, and I think it's an immense opportunity. So we're spending a lot of time at Assembly talking about the digital life cycle, and that right now many people think that sales stops at the point of sale. There's no further engagement. There's no further ability to engage in some extent. We think that the dealership experience and delivery model is going to undergo a complete transformation when it comes to how they're acquired, how they're purchased, how they're delivered. They need to be delivered. We've estimated that right now digital solutions for US dealerships, or let's say North American dealerships, has about a 20% penetration. But I think that number even is far too high because you can include a very simple website listing, what you have on the lot as being digital penetration. I think we juxtapose that with how we've seen kind of a digital first strategy in China. It's relative to what we're now seeing across the European and the North American landscape. And having individuals having a foot in both continents is incredibly valuable for us in looking at great entrepreneurs who are going to completely transform what that experience is. And then further upstream, I think we're in a very interesting time, when it comes to the balance sheets or the lack thereof, when it comes to how people are thinking about consolidation and advantageous opportunities there, verticalization, as well as kind of peers that are going to be coming together across geographies. All of these will be major trends I would offer of the next 3 to 4 years.
Talia, do you have any thoughts on that? How do you see?
Yeah, I can say that from the investment front, less so on the on location front, we're seeing a lot of deal flow specifically that we're interested that deals with digital tools for dealerships and basically how do we target better our potential customers. So a lot of artificial intelligence on direct targeting, on conversion methodologies, really. How do we really focus on the digital platform and how do we sell more cars that way? I don't believe that the dealership will disappear. I think that there are a lot of people that need to actually physically see what they're purchasing for the full, emotional effect. But I do believe that we're going to see a significant change with regards to, purchasing behavior and how people today, and in the future purchase their automobiles.
Niels, do you have any thoughts on that one?
I fully agree with what has been said. There's still the emotional thing about buying a car. And therefore, a lot of people still like the experience of going to the car dealer, and more or less experience the new car. Therefore, I think there will remain some sort of use case for dealerships. But at the same time, I think there are other people, like, for example, the younger generation, that that like to customize their cars online, and also there might be a good use model for other ways of distributing cars.
Yeah, I wonder, and I'll throw this out. I'll sort of take a counterpoint because I'm not steeped in the traditional OEM dealership world, coming in from more of just a software disruption investor viewpoint and really thoughtful about maybe autonomous. Well, why can't we just have that experience? Like I think Tesla is an interesting model, right? A Tesla looks like a Tesla. Maybe you drove it in friends. You kind of like how it drives. You just go online, you order it, the color, all the features, and then it's delivered to you. Why don't you think that's going to be the future model for every OEM or most OEMs? So I personally also like to, look, but couldn't there be I don't know, places if we still gather in a mall, for example, like Porsche has the car there, Volvo has the car there. BMW, Ford, GM, they have their cars lined up. You get in, you sit in it, you play around with it, you see the features. Then you go home, you order it, gets delivered to you, and you drive it. Why do we need, I don't know. Can we rethink this dramatically? Chris,
spoken like a true Tesla owner. I'm guessing. I don't know, Jim. I'm guessing.
I'm not. I love Tesla. I'm a shareholder. But no,
there you go.
And the only reason I'm not a Tesla owner is because I didn't like the Roadster and I wanted a convertible. So. But Tesla convertible.
The way that I would answer that is I think I've spent, whether it's time well spent or poorly spent, going to different dealers through different OEMs and just walking in off the street and saying, tell me about this car, and seeing what that experience is, just steeping myself in that experience. And between a Tesla dealership and your name your other traditional OEM, it is night and day. And so I think for those of us that are digital first, that are very much focused on technical attributes of the things we buy, whether it be a luxury item or whether it be something that's just steeped in technology, we're going to gravitate to that, and we're going to want to know that first. For the average consumer, I think there is an emotional piece, but I also think, to your point, Jim, there's more of a utilitarian kind of opportunity for a lot of these guys in terms of how can you get something to me quickly, safely, as cheaply as possible, and I know that I want this make model because I had the same one 5 years ago and it did well by me. That's the consumer juxtaposition, and I would argue we have this really interesting time right now of the insecure consumer. We have an interesting time where people aren't spending on big ticket items rather. That's an opportunity for us to actually engage and talk about what should you be buying and why should you be buying it, especially around automotive. But I'd be interested in Talia and Niels' perspective on this, given where they sit.
Your question reminds me of the Best Buy and Amazon analogy, where people would say that people would go into the brick and mortar, the Best Buy, to test out the latest, musical equipment or the latest LCD, and then go home and buy it on Amazon for a better price. I think I have many thoughts on this. One of them, I think it's a functional question. I think in the end, it depends on what kind of vehicle you're buying and what purpose it serves. If it's a luxury vehicle that you need to feel and see for yourself, it's an emotional purchase. It's a large purchase for you. Then I think that the physical need to see the vehicle exists. Whereas if I were buying a less expensive, more functional family sedan, I might be, more inclined to purchase it online. I can speak on behalf of Porsche. There are various channels that we allow our potential customers to experience the cars before buying them, and then they choose their channel for how to eventually acquire the vehicle, either through the Porsche experience centers that we have throughout the world, or also we have Porsche Passport and other vehicles that allow people to test cars and take them for a certain period of time, whether by the hour, by the day, week, and then they get to experience driving the vehicle. Yeah, I mean, the answer to that is I think there are going to be various channels for future acquisition, but I believe that we're going to see a lot more on the digital front.
Yeah, I think it's interesting that you're bringing, if someone's going to buy a $100,000 plus, sports car that's customized, maybe, well, they can afford that kind of price tag and they're going to go and get that special stream. But if it's more of a commodity, safe, great car, you kind of know what you're getting. You have a few features, you've driven in it before, a friend had it, it's your second vehicle that you've had. Why do you need all that? Maybe, and that's interesting, I think, and that makes a lot of sense. We'll shift a little bit here. And Niels, and I'll ask you a question about how you're thinking about what areas and future trends do you see? Like, what are you thinking about as far as investing in verticals and markets for startups? In the next year, really taking advantage of the pandemic situation, or next couple of years, but also the next three or 4 years. And I'm going to ask this question to everyone as well. I'm curious about what you guys are excited about, top trends in the space.
Maybe I can start with this question. I think there's a lot of ongoing in the area of information processing. Just to pick some examples, like, for example, sensor fusion, artificial intelligence and machine learning applications, and autonomous driving data management. You need to consider how the car of the future will look like. There will be a lot of information that will be gathered during the drive, and this information needs to be somehow processed. And therefore, it needs to be prepared, needs to be put in order, and need to be somehow stored and shared with the environment. And therefore, need to be very good solutions how to structure this information. And therefore, I expect a lot of activity from the startup universe in this area.
Chris, what do you think?
I totally agree. Those are major vectors that are going to be big opportunities. For me, I think AI certainly, but stimulation and natural language processing, looking at the way in which voice is going to become the medium with which you're engaging with a variety of different environments, and it'll be continuous through a person's experience, whether they're in the cockpit of their vehicle, whether they're in their home, whether they have their device. the opportunities to provide real value and also be top of wallet. Again, not letting that point of sale be the end of the relationship with your consumer when it comes to your vehicle. We think that's going to be really important. I think non-touch biometrics as it comes to access points within public and private transportation, the ability to kind of really leverage technology to ensure that you're both having secure access, but it's very sanitized and clean. And I think as a standalone opportunity, I don't look at it as taking advantage of what's happening right now. And I know you don't mean that, Jim. I think it's what we can bring in a real way is this opportunity to have the intersection of health and mobility. So how are we going to have a visual signaling of cleanliness, of sanitation? You know, what is the visual thing that we're going to have in our modes of transportation that is that folded Kleenex in the hotel? I think that's a big opportunity. It's not one that really people are talking about a lot yet, but humans are going to want to see signals. They're going to want to feel safe in those environments. And as a result, they will be safer and they will be more secure. And I think that's a great value that we can add.
Yeah, I think that's right. It's interesting. I want to talk about the safety piece of it. But Talia, why don't you tell us about some of the trends that you're excited about in the next, year or 3 years?
So all of those areas are areas that are very relevant for us. But I think one thing I think that's exciting to think about really is to kind of take a look at how our lives have changed over the past several months with this new environment. And I think a lot of us have undergone some kind of reassessment and awareness of how we conduct our daily lives. And so there are a lot of tangents to this with regards to verticals that basically create a lot of opportunity for investments, anywhere from the future of work. What is the future of our work life going to be if we are no longer needing to commute every single day? So anywhere from remote working platforms to production platforms that allow for remote teams to work together. Introspection about nutrition, wellness, fitness, and our own health. And topics like sustainability, I think, are going to be very relevant as well. So I think that beyond the automotive technologies, I think there's a lot of areas that are tangential to our industry, but that go beyond and basically incorporate a lot of the opportunities that we're seeing today with different environments.
And the big buckets of robotics and logistics, I mean, Jim, we have to talk about those. There's so many different subs within those two, but they're going to transform the way that we move across air, land, sea, and space.
Yeah, I mean, I think this gets into a topic that I think a lot about, and I've spent a lot of time thinking about and investing in autonomous. So I'd love to hear your thoughts on that. Maybe I'll kind of put out there a vision of how I see this going, but and it's often not a popular vision amongst folks who've been in the business for a long time, or especially working with OEMs. But I've always believed that a world of self-driving robotaxis just makes a lot of sense. And it's even more so today that, if we had vehicles to drive us around that we don't own and we don't have to pay so much upfront for, we don't have to maintain, they're on demand. It frees us up from so many things that we don't like today. We all have these expensive vehicles sitting around. We're not using them, right? And even when we are using them, they're sitting around dormant for 98% of the time and taking up a lot of space, whether it's in our garage or park, creating pollution and traffic. And I think potentially a world of full AV, we get rid of all those issues, and it's a much more productive time for all of us. Whether we're still going to work from home. Some people will have to go into offices, and some people's jobs will always require that. So if they can get commuted, driven around by these vehicles instead of having to own their own, I mean, and so I wonder, does this pandemic speed that up? Or does it slow it down? I mean, there are definitely, to your point, Chris, about issues of safety. I've been reading a lot about, is the public transit system dead now? Are people just never going to be comfortable going into a bus situation? How do we figure, we have to make it affordable for people. How do we do that? Is there a way to make it safe and use AVs to make it cheap and affordable for people? Or is it, are we going to be all driving in our own individual vehicles? Is the commute going to get even worse, if we do go back to work and not work from home? So there's a lot there. I'm just curious, what your guys' vision is. How do you see the pandemic playing out as far as autonomous, and any thoughts around that? Whoever wants to lead off there.
I think you need to consider a short-term and a long-term trend. Short-term, I think you cannot really avoid the collective memory, which means that people might remember the impacts of the coronavirus. So people at the moment avoid traveling or using the public transport. You can already see it if you, for example, use the train or tram. It's nearly empty, so people really want to avoid crowded spaces. This might change in the future because the economics behind shared economy is quite convincing, and therefore sooner or later I think the trend towards shared economy, shared drives will again recover, and I expect here a lot of growth in the future.
Got it. Chris, do you agree with that, or what's?
I mean, I think we're going to see kind of an interesting vectors that are going to lead in autonomy. So I believe logistics and delivery are going to be the tip of the spear. And I think if you look at this from a food chain strategy, you know, kind of
not people delivering goods.
Movement of goods. Yeah. I think that's exactly right. And so I think you have manufacturing warehouse facilities that are going to be automated and differentiated opportunities there around autonomy in fixed geospatials. You're going to have delivery from a small or big box delivery that's going to go to individuals. You have kind of the different vectors from sidewalk to bike lane to road and the way in which those are going to interact with each other. I think that's going to be really interesting. I do think we're going to see, you know, some wide deployments of low-speed fixed route autonomy, the maze of the world, that I think are going to actually offer some really interesting opportunities. But I also think the form factor is likely to change. Rather than getting bigger with more people, I think we might go smaller with less. And there's going to be interesting service opportunities around how do we maintenance, clean, and just keep those fleets to standard, whatever that standard is in terms of what's demanded by the consumer. But I think autonomy as a proud board member at Newtonomy, which as of today is still the biggest cash deal in the space, although Jim, you beat me for the largest deal. You know, I believe strongly in autonomy, but I think it's going to evolve a little slower than expected on the public or on the private sector side. I will say I'm also seeing a lot of really interesting discussions with regard to federal government and DoD on how autonomy can be utilized across all differentiated realms. So air, land, and space, and sea, excuse me. And so I think that's going to be interesting.
Interesting. Talia, you'll get the last word. What's your thoughts on autonomy?
I think a lot of the talks around autonomy and robotics, last mile delivery, those types of topics, I think those will continue and even so and accelerate. Especially we've seen a lot of the delivery robots, you know, now, especially in the past few months, riding around. With regards to the bigger picture, I think a lot of us have kind of assimilated, you know, autonomy and shared mobility through robo-taxis or whatever other platforms. And I think that now there is somewhat of a disengagement from the idea of shared mobility, given that we no longer really want to, you know, sit in the same vehicle with people we do not know, given everything that's going on. So I think it's going to be a dichotomy, and I think that we're going to see acceleration in certain areas and perhaps diversion in others.
Great. Yeah, I think that I think we're all sort of in agreement there. Maybe I'm a little bit more aggressive on the short term. I think this is going to accelerate a lot of in the very immediate short term. It'll slow things down, but I know, you know, the folks in the AV companies that we're involved with are working harder than ever before, and so I think that's going to accelerate, and we'll see. It's going to be a very interesting year, a couple of years. I want to thank you guys for participating in this panel. It was really interesting. I learned a lot. It was great to see you all, and we hopefully can do this again next year in person. We'll see.
Absolutely.
Amen to that.
Absolutely. Thank you. Many thanks, and goodbye.